morning and welcome to VSA Morning Miner. It's Thursday the 31st of July and I'm joined by Paul Rankin. Paul, how are you today?
Very well, thank you. Very well. We've got some rain outside, I see.
Hopefully rain on the window above me doesn't get picked up by the microphone. Right, there's quite a few bits of news, a lot of interim or quarterly results updates. We'll start with the biggest companies though and work our way down. Anglo American interim results. Have you got those, Paul, or do you want me to?
Yeah, that's right. I can speak a few things there. The interim results show a net debt position of just shy of $11 billion after these divestitures that they've done in the past half year. They successfully demerged what was Anglo Plats and now is Valterra Platinum, for instance, during this half year. They said they had strong operational and cost performance across their primary copper and iron ore businesses, as well as an interim dividend declared of 7 cents a share, which matches the payout policy for 40% of their earnings at this point. So it looks like otherwise the revenue position came in down by 7% to just shy of 9 billion US dollars. They did report a loss over the period, which was quite a ways up. Due to write downs of things like De Beers and so forth, such that it came in at a loss per share of 158. Otherwise, the basic earnings were also down by 55% to 32 cents a share.
Yeah, pretty messy numbers, particularly trying to work between the continuing operations and uh, discontinued with all the restructuring. It's worth pointing out that the dividend, which was down about 80% year on year, was calculated off the entire group. So those discontinued operations and ones held for sale, um, contributing to that lower figure of 15 cents per share. The ongoing business with all those excluded was 32 cents a share. So were the restructuring all complete, the dividend would have been nearly double that 7 cents a share and closer to where it was this time last year. So you can see why they're making the changes. But there are obviously a lot of speculation around the exact way that the De Beers exit will be executed, and that's probably going to weigh on the price for
Mm-hmm.
a while to come.
Sure.
Moving on to Endeavour Mining, Pool.
Yes, Endeavour Mining also came out with Q2 results there. That's the quoted company which produces gold across West Africa in various operations. Q2 and first half results here. And they produced 647,000 ounces, which is 55% of their full year guidance up to this point. And the all in sustaining costs came in at US $1,281 an ounce, which is pretty much in the middle of their guidance range. And they had an increase of about $96 an ounce on their all-in sustaining costs because of some of the sliding scale royalties that they have across their businesses, essentially cause a payout of greater amounts to the royalty holders than previously. Other than that, the earnings per share beat consensus by 13 cents a share, or 21%. And otherwise, with the second quarter production at 306,000 ounces in all-in sustaining costs at 1,458 an ounce, that came in at a cash flow per share of $1.22. So you're looking fairly strong at this point, but you can see that the all-in sustaining costs are rising, and in part due to those sliding royalties on some of those assets.
Yeah, the share price has been doing fairly well, though, tracking higher with the gold price. It had broken out of a long range-bound pattern, obviously various corporate issues that the company had to get over in the last couple of years. Moving on, our favourite tungsten producer, EQ Resources, had its quarterly activities report.
Yes, that's right. Quarterly activities for them, essentially a repeat of a lot of the press releases that they had done over the last quarter in particular here. This is for the June 30 period at this point. And they had reported here a total of 36,300 metric ton unions of tungsten concentrate produced, of which Mount Carbine produced just shy of 7,000 in that operation, and the Spain Solaro subsidiary 28,000 metric ton units. They also talked about the installation of the third ore sorter and that sort of thing. But the nice thing to see too is the ammonium paratungstate price in the mid price range now at US $463 per metric ton unit, which is a 22% quarter on quarter. So they're definitely sharing in the benefits of the rising tungsten price market at this point in time. And cash receipts from customers came in at Australian 12.6 million, which was 16 million of revenue generated in this current quarter.
Yeah, obviously the backdrop for tungsten has dramatically improved through the year, and that partly enabled the company to complete a financing during the period that was led by its major shareholder, Oaktree, who've actually post-period end completed a royalty deal with them for $7.5 million, and that's on Solaro. But this additional funding helping them to get through this lower grade phase of the pit before entering the higher grade zone, which is a bit deeper and should really help them with improving profitability. The other thing is that fundraise has enabled them to purchase additional ore sorters and complete some capital projects at Mount Carbine, which should also help them move operational and earnings performance up a level. So given that fundraising was done in the period, we'd expect it to start to benefit from this quarter onwards.
That's right.
And
And
sorry.
just to mention too that this production rate at over 36,000 ounces or 36,000 metric ton units makes them definitely one of the major tungsten producers for sourcing ex-China material across the world as well.
Absolutely. Anything else, Paul?
That's all for me for today.
All right. Thanks very much.
Mm-hmm.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.